Hi, I'm Hedgeye founder and CEO Keith McCullough. I'm excited to announce the Hedgeye on the Prize tournament. I challenge you to compete in this simulated investing tournament to win some serious money. We'll be awarding weekly and monthly cash prizes along with the big grand prizes. Along the way, we'll teach you how to take your investing to a whole new level. I hope you'll join us. I'll be coaching you every step of the way.
Puma this morning, and that's a name I don't talk about a lot. It beat on revenue and gross margin, and in spite of the pressure that we're seeing on the supply chain. And with the footwear space, you got this whole, a lot of footwear is made in Vietnam, and with the factories being closed in southern Vietnam, it's really hurt this space. We already saw that in Nike's numbers, and Puma put out really good numbers in spite of all the pressure out there. The company beat on revenue, beat on gross margin, SG&A looked fine, narrowed its EBIT guidance for the year. It was in between 400 and 500 euro, and it narrowed it to in between 450 and 500. So not a huge guide up there, but definitely a positive data point in light of the negativity that we're hearing around the space overall. The big catch, and this is a big one, is that you had Asia Pac that disappointed. And while the company doesn't break it out, it's got to be because of China. And you saw Nike's China sales slow. You saw Adidas's sales slow. And now Puma slows in China. And it's at the same time where you have Li Ning, which is a really good brand. It's a local brand. It's actually a company Felix and I should probably co-cover it. We'd have a killer call on that thing. Put out numbers earlier this week, and their sales were plus 30%. So looks really good. Feeds into the whole narrative that you have local brands which are squeezing out the big multinationals because of pressure on the part of the government to have consumers buy local product. So it's a real nice narrative now. It sounds really pretty because and it sounds very bearish Nike and very bearish Adi. If the stocks are down because of this whole narrative around local brands in China gaining share, I would go long Nike. They will not have sales down in China 2 quarters in a row. It just won't happen. It's written in the cosmos. And I'll put my foot down on that one. People aren't looking at the whole macro call. They aren't looking at the negative data coming out around China just in general. And they're blaming the entire slowdown with these brands in China on losing share to the local players. Ultimately, the consumer can be swayed by the government, but they're going to go, at least in this space, towards where the best and most relevant product is, and the brands that are backing it up with a really good brand message. And the one I trust to do that the most is Nike, still the number 1 brand in China. I think you're going to see pod 1 for Nike in China, or revenue growth, accelerate as this year goes on. So, and I think Nike overall, the company guided down due to supply chain pressure and the lack of product flow out of Vietnam. They guided down from like a $50 billion top line number this year, closer to 46, 47. I think when the May fiscal year is done, I think it's going to end up coming in damn close to 50 billion. So I think it's the punchline here is I'm incrementally bullish on Nike out of these Puma results. If this whole narrative around, no one can grow in China anymore because China only wants local companies to grow, like as that manifests itself and people don't pay attention to the macro and what the companies are doing to respond to it, I'll definitely make the bullish call on Nike around that. So that's all I got this morning, Keith.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.